So, Andrew, let's cut right to the chase here, okay? We've got energy companies popping today, crude oil making a move back towards $60, and the Fed chair promising that they know this inflation is going to be short term. Is that argument solid? Is the tension in this market between the Fed chair done today, Andrew, or is it still brewing?
Ollie, the Fed chairman has done a very good job today trying to talk the market off a ledge. Starting with a 7-year auction yesterday, you had all of a sudden some vigilantes come in and move basically the 10-year back 7 or 8 basis points all the way to 165. The Fed chair has gone out of his way to talk transitory. He must have said it 50 times in his statements and in talking about inflation. But no, the Fed chairman's going to be proven wrong. Not today, not tonight. And with Japan closed tonight, maybe not till tomorrow. And of course, month-end duration extensions as well as some reallocation may put it off till next week. But inflation's a problem. You've got money supply up 24% year over year. You've got the Fed balance sheet up 19% year over year. You've already gone through the Goldman Sachs oil analysis where they're talking about 80 and commodity prices up another 13% after wheat, corn, and soybeans all hit records, 8-year records in the last few days. And you know, lumber, we don't need to talk about that. Everyone knows the lumber story. And, you know, Powell is saying employment's getting better. Employment's getting dramatically better. Look how many people are looking, you know, for people to work in jobs, and they can't find them. You know, unemployment number, the next one coming out next week in May, I think it's going to be somewhere over 1 million. It might even be close to 2 million. These numbers are going up and going up dramatically. So, yes, the Fed decided not to do anything today. There's no talk of tapering. He made it very clear he's not going to taper. But the reality is, I think they're going to push and shove him come the June meeting to start thinking about tapering. So the thinking about is going to happen. So, yes, I believe the Fed did it. The chair did a very good job today, but I think he's going to be proven wrong. As far as your equity markets, you know, I still see this NASDAQ higher rates. If we get to the higher rates, which I'm looking for over the next 2 to 6 weeks, then I think the NASDAQ going to have some problems come the end of May. If rates stay down here, then you're probably going to be okay. Either way, the economy's going to grow, and it's not going to grow by drips and drabs. It's going to grow by leaps and bounds. I mean, this mask mandate that they took over yesterday, where you can now walk outside, you know, this COVID stuff is going away and the economy's just going to soar.
Hey, it was popping here in Chicago yesterday. The River Walk was totally packed and at full capacity. So it feels very real, that recovery, Andy, and the confidence that the Fed chair has that it's going to be short-term in inflation. You just said that you believe they're going to be wrong on that. What's the most compelling information, data if you got it, Andy, that inflation will be long-lasting?
Well, I think the money supply that I just mentioned, I think the Fed increase in balance sheet, I think the last number of retail sales was close to 10%. Unemployment numbers are going to start being above 1 million non-farm payroll numbers. I think you know, his employment thing of trying to get to 3%, he's honest about that. He really does want to get there. And I think that's all going to start to show up in wage inflation. And even though it isn't there right now, we started to see it in some of the Atlanta Fed numbers. So I think wage inflation, shortage of workers, lumber, wheat, corn, oil, I think he's going to really be pushed towards the June meeting. And the word transitory is going to be something that he's going to have trouble maintaining. So
when we look at those potential catalysts for inflation, the money velocity and the balance sheet, I mean, we've seen those for a while now, never led to big inflation. So it seems like right now it's gotta be these economic impulses that are showing up in some of these agricultural commodities, or the employment now that happens if we get there with the personal incomes that have risen. How does the stimulus fit into this, Andy? What role does that play this next round that's expected? Because it's going to be a little bit different, right? It's not just going to be a money drop. It's going to be a money drop, but then also it's going to be a money take, and there's going to be taxes involved. There's going to be other complications and strings attached. How does that fit in?
Well, first, let me say that money supply and the Fed balance sheet, you know, there's a reason that 10 years went from 90 basis points at the end of last year to 175 last month and 161 right now. So there is part of that, but it is a lagging thing. Okay. As far as the stimulus and And, you know, in the two packages, I mean, Biden announced 2 weeks ago a 2.3 infrastructure package that really didn't have much infrastructure in it. And he's going to announce another one of $1.8 billion tonight. $1.8 trillion tonight. So between the two, that's $4.1 trillion. What is that? Probably about 25% or 20% of the U.S. economy. So you're talking a lot of that. And yes, some of it's going to be paid for. But come on, you know that these tax increases are going to have a hard time making its way through. And even when it does, you really think the wealthy are going to be paying 56% capital gains in New York or in California, 52% in New York? I don't think so. I think these things are going to be watered down dramatically. And I think it's going to end up putting a lot more pressure on more and more treasuries to come to the market. And of course, we're seeing a lot of high yield and corporates coming to the market as well, as the corporations are taking full advantage of this. So you've got tremendous amount of supply, you've got tight spreads. I do think that more and more bonds are going to be issued, and I think rates are going to go higher. The question is, what happens to the economy as rates go higher? I think we're okay in the short term, but if 10 years go above 2% and sustain above 2%, I think that's going to cause some problems.
Andy, you mentioned if rates start to move higher, the potential knock-on effect, again, for the NASDAQ, as we've seen. But right now, it's interesting. I think the most interesting thing, if I had to pick so far, is that bonds got this big bid over the last 30 minutes, totally reversed on the day. Yet the stock market can't really catch much of a rally here. I mean, what would it mean if we get everything that we want from Powell and then we get what they want from the bonds, but stocks don't move with it? What would that tell you?
Ollie, I'm not sure it tells me very much, because today's April 28th. We've had a very good month where stocks outperform bonds. So there's some reallocation that's going to go on. And I'm not really sure you can make a determination based on how it trades over the next 2 days. Okay. While the Fed move is important and it's trend setting, you know, with the Golden Week in Japan as well as the end of the month here, I'm not sure you can pinpoint it as closely as you might if the meeting was in the middle of a month.